18 times more people around the world can buy precious metals than in 1980. We have 55 times more units of currency. 55 times. Whoa. So in that 42, 43 years, yeah, that's huge. So potentially 55 times more currency could start chasing precious metals. 56 times more millionaires, 200 times more billionaires, and just a few of those billionaires could buy the whole of the silver market and the mines and the explorers and everything if they want, if it was for sale. 200.
Welcome to Gold Silver Pros. Searching for the best precious metals deal? Shop with our trusted partner, Ark Silver. Access special deals on silver, gold, and platinum through our website or call 307-264-9441.
Everybody, this is Rob Keents with GoldSilverPros.com. This is our weekly metal market update with Ian Everard, who runs Ark Silver. Ian, how are you doing today?
I'm good, thank you, Rob, and feeling better having a chat with you. You always cheer me up. So.
Yeah, it's been a bloodbath in the gold and silver markets this week, and there could be lots of reasons for that. Sometimes you have healthy pullbacks. In me looking at the charts, it's not anything completely abnormal. However, definitely concerns with the COT report not being out. It hasn't been out since January 24th. It's actually a month. It's a calendar month that the updated commitment traders reports are not out from the CFTC. So unfortunately, we can't analyze that market for people because when we don't have the data available, we can't tell you who's doing what on the market. So I know that there's more selling pressure than there is buying, and you can look at the aggregate data on the CME group and see, overall, pressure is down, but we can't really determine who's doing that because the regulator for that market apparently has a data quality issue and has doesn't have proper data governance in terms of backup recovery and disaster recovery, make sure they get that. So right now, I feel like, Ian, as though we're flying somewhat blind in the precious metals market. What's your view on that?
Yeah, I mean, crazy moves. Did you see that spike? We spiked to 22.25, and it's like, then we're down to 20.86, or just wow. And we had a spike like that, I think, last week as well. And now, is that the algos taking over the human manipulation? I guess there could be a risk that these monsters that we've built for trading could send it to infinity at some point. That would be interesting, wouldn't it? And I guess they just pull the plug. Is there a gap? Is there a gap up limit on the? Do they just pull the plug? If we saw $30 silver, would I just switch it off so no one would know?
Well, let's look at a chart real quick. So this is the price action, the daily chart, and gold's just getting slammed down here, and silver at the same time. And I'm wondering why, because it's not like we have a lot of good news in the economy. It's certainly not like people think, oh, everything's great. We're not going to have a recession. The Fed's going to pivot, and start reducing interest rates. None of that has been announced. So why are gold and silver just getting slammed here? What news in the economy or what news in the gold market, would cause people to say, yeah, it's time to just go dump a bunch?
My suspicion is the manipulators are incredibly skilled at this. They've had decades of practice, millions of hours have been put into pushing the price one way or the other, and then they gain each way. My suspicion is there's some big players using this to mop up huge amounts. I can't quote any of my wholesalers. They ask me not to quote the discussions I have with them. There's huge physical buying in the 1,000-ounce bar when we get these drops, to the point that I can ring one of them and he's on free phone calls to the president of the company. Huge physical buying in these smackdowns. Now, is that people using proxies to? I don't know, or is it private individuals? Yeah. So
here's the report as of yesterday's data on settlements on CME Group, and I'm looking at gold. So we're just looking at gold right now. The dominant contract month is April, and for everybody that's not as familiar with the gold and silver markets, it's a futures market, and this does determine spot. This is where spot's determined. It is on this market, not on a collection of dealers, not on reports from wholesalers, not on physical flows. It's paper, and the reason we know it's paper is because you have all the settlements. We didn't have 180,000 contracts closed yesterday that physically delivered the metal. In fact, the physical deliveries were only 189. So you have 189 physical deliveries. You can see right here in this delivery column, but you go over to settlements and we had 180,000 paper contracts closing. And that's what's happening. It's a paper contract, but because we don't have the COT report, Ian, we have no idea on who's doing what. Let's look up the CFTC COT report. We're going to go over here, commitment of traders. And this is where the CFTC would tell us who's trading. But, oh, I'm so sorry, we don't have that data. It's a month old. We can't tell you who's trading that market. So I have an issue with that. And I think fundamentally, it's very difficult to say what's going on gold, silver right now, because you don't have the data for the market that determines the price.
Yeah, I mean, we could go down that route if somebody wanted to make huge physical purchases completely privately, and they've got the ability to turn off these reports. It's like, whoa, this could be interesting. Maybe when it switches back on, we'll get a huge spike up.
Well,
maybe it's just a coincidence. Yeah.
Yeah. Let's talk about, let's kind of switch gears into something you brought up before the call. It's related. Let's talk about what's actually going on in the economy. I think you had some statistics, Ian, that point to why gold and silver probably should be going up rather than down. Can you share some of those with us?
Yeah, sure. I've borrowed these from Mike Maloney. So if you get to watch this, Mike, I had bought some copies of your book. Love your work. So he brought out this list of things compared to the 1980 run in precious metals. The situation now, I'll just read out the list. So we have 18 times more people around the world can buy precious metals than in 1980. We have 55 times more units of currency. 55 times. Whoa. So in that 42, 43 years, yeah, that's huge. So potentially 55 times more currency could start chasing precious metals. 56 times more millionaires, 200 times more billionaires, and just a few of those billionaires could buy the whole of the silver market and the mines and the explorers and everything if they want, if it was for sale. 220 times more consumer credit, and that's available consumer credit. So not debt, but credit that is potentially available. 31.5 times more assets under management, and 49 times greater global stock market cap. So all of these figures are showing a huge increase in theoretical wealth, because I call it theoretical wealth until you turn it into primary wealth.
Can you hold that up to the screen, those statistics that you...
I can, yeah, no, sure, yeah.
And this is from Mike Maloney. So versus 1980, we have more people, more currency, millionaires, billionaires, credit, assets, global stock market cap. But do we have, what about the gold and silver? Ian, has the gold and silver price gone up high enough to account for those things in the, what I call the fiat market? That's all fiat market. It's all a paper market.
Sure. No, I mean, and I think Mike mentioned in the video I got this from, I think gold did a 10x in that 98 run up, and silver did a 40x. I mean, that could be really modest if you look at all of these factors, all of these fundamentals. If half of 1% of all of this wealth or perceived wealth realizes, okay, this is just fugazi, this is fairy dust, I need something real, I want something I can bury in my backyard, I want something real that no one can take from me or tax from me or lock up, steal, or whatever governments are good at doing. Wow, we only need 0.5%, even 0.5% of that tries to migrate into precious metals. They're sold out in minutes. I mean, the mathematics is just outstanding. 200 times more billionaires.
And I'd like to point out, before you go on, not to interrupt you, Ian, 200 more billionaires based upon what? How did they become billionaires? It was fiat money being pumped into the system. If we had not had a system in which pure fiat could just be pumped in there, they wouldn't be billionaires in the first place. Yeah. Which means when the system resets, they're not going to be billionaires after. All those ones created through the fiat system are not going to be billionaires. All that value has to be sucked back out. Yeah.
Yeah. The irony is they could end up poorer than their cleaner or their gardener or their chauffeur.
That's right.
And we see it every now and then. The guy who lost 20 billion or 40 billion, and that 𝘎𝙁𝙃 capital hedge fund, they just get wiped out. We see it, but you imagine a mass extinction of billionaires. I mean, it'd be tragic for them personally and for the people they employ, but would be sort of funny, wouldn't it, as well?
Well, yeah, because I may have some sympathy, because at the end of the day, you have to understand we all grew up in this system and we're all brainwashed into it. And it's only through our own efforts that we work our way out of that brainwashing and maybe find some level of truth. So I could see having a modicum of sympathy only because of the brainwashing. But if at this point in time, we're sitting here in 2023 and people that are billionaires who are obviously pretty intelligent can't figure out the system and how to protect themselves, I probably wouldn't have a lot of sympathy for them losing their wealth. Because honestly, if you're going to have that much money and not take the effort to really understand how money works and how the system works, at that point, I probably wouldn't have too much. I mean, I don't ever wish ill on anybody, but goodness gracious, if you're a billionaire and you don't have just some gold and silver in your portfolio, or, alternative non-purely paper assets, even like, income producing real estate or farmland or something physical, whatever it is, then at this point, I got to question your sanity. Who Ian looks at this market and says, oh, no risk, don't worry about it. Let's just go pour more money into bonds or stocks or whatever the case may be.
It's not only the system is saying there's no risk or people are being brainwashed. They're being brainwashed. This gravy train is going to carry on permanently. It's like, but yeah, 55 times more currency in 42 years.
That's a crazy
So
amount.
that's a dilution. Okay, we've had population growth, sure. So take that down to 20 times more currency and say we've actually had some genuine increases in GDP. Okay, let's be really generous and say we've got 10 times more currency. That's going to get burnt off. That theoretical wealth is going to disappear. And as I've mentioned before on your show, Rob, I am convinced the way the Fed is going to do the quantitative tightening is they're going to bring in the new digital dollar, and then they're going to lock up a certain amount of old dollars that will come through later, and later will never come. And that's how they do the quantitative tightening. There's a whole load of individual companies and individuals will be the bag holders. They'll be doing the quantitative tightening.
Yeah, they will. My biggest thing is when the system resets, and I think it's gonna, Ian, you were telling me you thought it could really start this year, and I thought, I've been so jaded by the fact that we've been kicking the can down the road, and we've just been hanging here for 10 to 15 years almost since the last recession. And we all know, anybody who looks at this objectively, and I'm not talking about people who are so ingrained in the system and have so much to gain from the system that they can't see the truth, because to see the truth would be their own financial destruction. So there are certain parties who are married to the system who will never be what you would consider to be objective at this point. But sweeping that aside, who looks at the system and says it can keep going for another 4 to 5 years? I don't see it going. And I think you're starting to convince me more, Ian, that it may start this year, because when you look at the goofiness going on with the regulator over the commodities markets, when you look at the goofiness going on with the FDIC saying the crash is coming, and don't tell people, when that stuff starts coming out, we're already crossed the Rubicon at that point. So we know at this point, the system's going down. The only question is when. And given all the goofiness I see going on, and all of what I think is the media running cover stories on stuff that does not matter at the end of the day. And, you look at like the Supreme Court justices, Brett Kavanaugh. I'm going to go to the political spectrum here for a moment on the Supreme Court. And whether or not you approve of Brett or not, I'm not making a Republican versus Democratic argument, but he got up there and he was lambasted over potentially a previous, affair, with another woman type of thing. And then it recently came out in the news 2 weeks ago, very quietly, that she said, "Oh, I made it up. I was just doing it on purpose to grab attention." And that was what was that covering up at the time? What was going on at the time that was very important? There were a lot of political things going on at the time that were very important with regards to investigations and things like that. And that Supreme Court drama was kabuki theater to cover for maybe more important stuff. Well, look at what's happened recently. You had the fake alien events around the US and I think one report in China, whereas the US officials have now come out and said, yeah, they weren't really UFOs and they weren't really aircraft. I'm like, what did you shoot down? A flying box carton? Did you shoot down a pig with wings? I mean, what the hell was it that you were? And here's the thing. I read somewhere, and I don't know if this is exactly correct, but it's something like $20,000+ to run one of those stealth jets for an hour just to get it up in the air. The pilot's cost, the fuel cost, the maintenance costs.
Oh,
and they're
easily.
shooting a $400,000 rocket. You know, it's something that apparently was a flying box carton, or maybe it never existed to begin with. And the insanity of all, and then you look at it and say, that was a fake story. Well, what else was going on during that time? Well, you've had issues in the economy. You've had issues with the commodities markets. You've had, you know, political issues. There is so much going on that we get these stories in the mainstream media promotes that end up being false stories that come out later that they're false stories. And yet we have important happenings going on in the economy during the same time. And so to sum what I just said was the kabuki theater is ramped up at a time at which a lot of important information is coming out, and people, if they don't come to this channel or similar channels, aren't going to know. And I guess that's my concern, is people aren't getting that information, Ian. And maybe that's why gold and silver haven't really taken off yet, because even though generalists are starting to pile in, they're not running for the exits of the regular system yet. And to wrap my thoughts up, I'm concerned people aren't going to get out in time, essentially, because of the media air cover with nonsensical stories that later get reported that they're not real.
Just by very nature of the system, though, Rob, most people can't get out.
Yeah.
Because as soon as that move starts, real stuff gets repriced very rapidly. And so most people can't get out. I mean, I often visualize sand in an hourglass. You've got so much sand, say that's perceived wealth, and it can only run for a certain pace to get to the other side of the hourglass. So say there's an hourglass worth of sand waiting to filter through, but it's only going to be 30 seconds. Not a lot of sand gets through, does it? And it's the same analogy as the theatre on fire, and there's one little door. 2 or 3 people get out, and the door gets blocked with the stampede.
Right.
There will be a stampede out of this fairy dust wealth. And it's a lie of the system. It's a lie of the system that you need to be making money on you need to be making currency on your currency all the time. And if you're not, your fear of missing out. And it's just people's fundamental lack of understanding of what is money. And currency is only a derivative of money, and money is gold and silver.
100% true. And for those of you that may not have seen it, last Thursday on my program, I did a series on risk management, and I outlined risk, and it's just an academic exercise. But I outlined the risks that I saw in the system, and gold and silver are coming down right now, but those risks are getting worse. So we have price of a safety asset coming down, risk getting worse. And to me, that's a buying opportunity. And then people can say, well, you're running gold, silver pros, you're just shilling the metals. No, I put on screen my own personal view on risk assessment, because I see the risk going up, and I don't know what asset is going to do for people what gold and silver will. If you look at Bitcoin did not hold value last year. It sold off harder than anything else while gold and silver held it. I think that's a good indication of where Bitcoin is at this particular moment as a safe haven asset or a currency. It's not. Would it be in the future? I don't know. But right now, it's clearly not. I mean, that's not even debatable. Look at what happened to the stock markets. Look at what happened to bond rates. Bond rates are flashing a recession right now. We got yield curve inversion. Where do we go, Ian? I mean, I ask this question every time. I seem like a broken record, but where the hell do you go if not gold and silver? I just don't know.
Well, the central banks are going to gold. Was it the greatest amount by weight, not by price, by weight ever?
Yeah, so, it is.
Now, and we know they all have a cozy get-togethers every 2 months at the BIS. All of the major central banks, they send their heads or their chiefs to Basel, Switzerland.
That's right.
All their private
we should call
meetings.
them the little Indian meeting. It's the little Indian meeting, the little chiefs.
wouldn't you love to sneak into that and just see all these discussions? Because why would they buy the most gold ever? What? Why? The only reason is
banks. Think of it this way: the reason that we know, Ian, it's not an opinion.
Yeah.
It's logic. If a central bank if the system is buying gold hand over fist, and they have been through so many of these solvency challenges to where their regulators are literally going to squeeze their nuts if they take on unnecessary risk. What do they do the last 10 years? According to new Basel regulations and new regulations for liquidity, they pile into gold. Because the regulations, the Basel III regulations say gold is a high quality liquid asset when it's hedged. It says it right in the regulation. What have they been doing the last 12 years? Buying gold like it's going out of freaking style. They're the #1 buyer, period. There is no logical way that you can conclude that the banks think that gold has risk. They would be absolutely insane, Ian, under these tougher regulations where they could be held to account by the regulator and shut down as a going concern, or at least have to answer to the market because they didn't pass a stress test to take on gold if it were not the actual ultimate asset in the system. The only assets they want right now are the ones that are going to save their ass when the crash comes. And what are they buying the last 10 years, 12 years? Gold. Okay. They're not buying a bunch of sovereign debt anymore. That's what tells you logically the central banks believe, whether this is true or not. I'm not saying gold is the only answer, but the central banks certainly think it is. But there's no way, Ian, that under new regulations where they could be shut down for not having proper liquidity, that they're going to go buy gold hand over fist unless they know it's the ultimate asset in the. There's no other logical conclusion. Nothing else makes logical sense, period.
No, and it looks like, I mean, I don't know if you've seen, there's a lot of pictures still coming out from Iraq, from the second war we launched there, of US troops bathing in containers, shipping container full of gold bars. It's like, where did that go? It's like, it's come home, I guess. And now I'm torn here. I hope we have got it.
Yeah.
Even though we got it by possibly stealing it from someone else. So I hope the US has got about 20,000 tons and we can at least match what China has if it comes down to it. And I hope they relax all the mining regulations and they open up Nevada and just mine the crap out of it. And I mean, because we've probably got tens of thousands of tons in the ground in the US, I would have thought. And, you know,
we do, and the mining restrictions is probably for another program, and I do want to talk about that, but that's been a big issue. And I have been to site in Mexico and the United States quite a few times on mine sites, and it's actually harder to get a mine permitted and running in the US than it is in Mexico. So for everybody that thinks that Mexico has a high jurisdictional risk, what about the US? From a regulatory perspective, getting anything out of the ground here is very difficult. So Ian, it would take years to reverse that trend in the mining sector in the US for us to be able to substantially provide our own supply of gold and silver. It would take 7 to 10 years from now. Even if we started right now and nixed all the regs and said, everybody go develop, it's going to take 7 to 10 years before we have a lot of production.
But we could now say, if I was the government and I was disreputable, nefarious, you could say, okay, the government now owns all of the gold and silver and the lithium and the cobalt. The government owns it all.
Yep.
Probably within 6 months to a year, if you employed all of the geologists you could find, you could do proven reserves.
Yes.
So it's in the bank. So you've been busy using up all the world's stuff, but whilst you've kept yours in the bank, in the ground, because if it's in the ground, it's there. If you know.
Oh, I think we'll have it. I just think there's going to be a period of time in which it's physically the market's going to want it, but that readily available supply is not going to be there because of that 7 to 10 year window. So I agree that the U.S. is really rich in resources. I would say from an energy perspective, thorium. When the thorium revolution hits, we've got so much of it. We will completely, from a grid perspective, be 100% independent, shipping this stuff off to many other countries in the world. So I do agree the U.S. has a lot of resources, but the policy right now is not conducive to us getting this stuff out of the ground anytime soon.
Sure. But maybe that's a long-term plan. I mean, maybe that's what they were thinking when the national parks, when the state, all of these were formed. We'll lock it up under beautiful trees and moose and bears and stuff, and then when we need it, we can just shove them out of the way and dig it up.
Yeah. Well, that leads to the next question. What about the metals market? What about the metal now? Are things tight? Are the wholesalers, do they have good inventories now? And what's going on with premiums? I think you mentioned that premiums are shifting a little bit.
Yeah, premiums are rising. We've managed to bring a few down for our special offers. We've got one slight rise in the 1,000-ounce bar. Yeah, I've had the word just today. These premiums are not going to hold. We've seen 25 cents rise, and a lot of the coins, they're going to turn fast. And I think it's the dysfunction of the system, and it's something that silver-backed precious metals are working hard, processing the 1,000-ounce bars to be able to hold premiums low when we get a surge again. And the surge is coming in premiums for sure. Yeah.
Yeah. So you're already starting to see premiums tick up just a little bit.
Yeah. A lot actually on some product. Yeah.
Okay. Do you think that's because of the supply chain, like as the wholesalers are getting it, or do you think that's more demand driven on the retail side where people are just coming in and buying more?
I can't say I understand. I can't say I've got a clear overview of the whole system.
Okay.
We're a medium-sized player. It does seem dysfunctional. I think we have too few primary wholesalers. We have too few independent mints. It's incredibly hard to start a business in the precious metals world, as we both know, Rob.
It is.
This is hard work. It's like, this is not the path of least resistance for sure.
No, and for as much as people complain about premiums, I just want to be clear here. The guys at the end, the retail dealers like you, are at the end of the premium. So you get to add your premium markup at the very end. The majority of that premium gets marked up at the wholesale level right after it comes out of the industrial market. So a lot of the premiums are really controlled by the wholesale players. You guys are on the very end. So you basically have to deal, like if the wholesalers are taking a bunch of the premium and you don't think that you're going to get as much, you may have to discount your stuff as a retailer, and that could put some price, some price pressure on you as well.
Absolutely. Yeah. But things are changing. I'm going to encourage Silverback are growing. They're making great product. We're really pleased to sell their slices and these awesome 10-ounce bars they're making.
Yeah, those poured bars are really gorgeous. Jim does a really great job on those. Yeah, we're big friends with Silverback because Silverback and Ark Silver, one of the reasons we like to have you guys on the show is because you offer deals to people that beat a lot of the retail side. In order to do so, you have to be super efficient in your business. And so you put yourself, in direct competition with bigger businesses, but you guys are doing a great job holding your end up and then providing people good deals. So talk about that for a minute. We'll put it up on screen, but talk about, the metals that you have available for people that they can get if they want, and let them go compare to everybody else. Let them go compare to the market and see if your prices are good.
Yeah, sure. So we've, the only thing that's gone up is the 1,000-ounce bar. We're 6 cents up, and we're holding the kilos, 195.
Okay.
We've got some Austrian Philharmonics, and we managed to drop them to 315. And then the other sovereign coins, apart from the Eagles, are 350. And then we got a deal of Eagles at 775. So that's the lowest we've seen them for a long, long time. And our spot, we use genuine
spot. I was going to
spot.
point that out. Yeah, go ahead.
Yeah. So I think the lowest I've seen spot from any of the big online competition is 18 cents more than our spot. So when you look at their premiums, add 18 cents minimum before you compare them to our premiums.
Yeah, and explain that. You're saying genuine spot, which is actual spot, because the confusion that people get when they're buying precious metals. Why are there so many differences in price? One, you have spot, and then you have the bid-ask spread, and then you've got premium. Why are you not charging a bid-ask spread when you're buying and selling?
Yeah. Well, it used to be a suspicion, but I'm convinced now it's just a way of making the premiums look lower. If you add a premium to spot by inflating spot, all the major wholesalers charge the retailers genuine spot. All of the mints base their prices on genuine spot. So let's call spot spot. And it's
so you're saying the bid
really,
ask spread is an amount that a retailer would make on the price of metals, depending on how they set their spread.
I don't fully understand it. I'll repeat, all the major wholesalers charge genuine spot to the retailers, plus their premium.
Yeah.
So yeah, all of this bid ask thing, I think it's just a whole load of confusion. There's a base price that changes every few seconds live, and it's easy to find. We use a British company called Bullion by Post. They have great price charts. We've decided, right, we're using their charts. They update every 5 seconds. It's easy to find what real spot is. So this is a challenge to everyone else out there. Start using genuine spot, then people can compare easily what the premium they're paying is.
Yeah, awesome. And you guys, I think your prices are lower than most outlets. So we're going to put up on screen how we get in contact with you guys. We just developed something on our website. You just go down to More on Precious Metals, go down to the ARC, click on Access Deals, and there's a form here, Ian. And when they fill out that form, it'll send it to you, and you may either text or email them, or you'll get back with them on what they want.
Yeah. Oh, and we have just got another delivery of these Britannia bars.
The Britannias, yeah. That's one of my favorite ones. Such a gorgeous coin. The coins that the UK puts out are just so gorgeous. They're great. You can tell that they've had them for a long time. They've been out and developed for a long time. They're just really gorgeous ones.
Yeah, the Royal Mint in Britain produces excellent products for sure.
So Ian, if you don't mind, give us an update on your store. I know you're putting a store out there near Jackson Hole, and you were building some cabinets. How's that going?
I've put a hold on that because it's below freezing here. My workshop is not heated, and you can have accidents in the shop using cold. So I'm waiting for some warm weather. I'm heading down there this afternoon. We're going to be installing some equipment. We've got it painted out, so it's looking presentable. So I'm going to be brave and say, I know I said a week ago, 2 weeks. I'm going to say 2 weeks ago. Okay.
But people will be able, when you get this open here pretty soon, people will be able to go up and see you in person, right?
Yeah.
So if anybody wants to meet you, Jackson Hole, Wyoming area, correct?
That's it. It's a great place. You've got Teton National Park, you've got Yellowstone, you've got wilderness everywhere, you've got the Wind River Range, you've got the finest fishing in the wild. We've got brown bears, black bears, grizzly bears, all of the bears, hair bears.
All right. Well, awesome, Ian. Thank you so much for joining the program, and we'll see you again next week for the Metal Market Update.
Thank you, Rob.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.